Yeah, in this episode, we will be discussing the concept of lease payments. We shall be discussing this exclusively from the viewpoint of the lessee. What are the items that will be included in lease payments? What are the items that shall be excluded? In the earlier episode, when we were discussing the cost of ROU asset, we suggested that the cost of ROU asset shall include present value of lease payments. I'll take you to the earlier note. Let me clear it up a bit for you. Here it is. We are saying it is the initial measurement of lease liability. And here we say that this represents present value of lease payments over the lease term. It is this thing, lease payments. That is what we are now attempting to understand. So going back, yes, lease payments, as you can see, inclusions and exclusions. Let's understand the inclusions first, then we will discuss the exclusions. The very first item that will be included in the lease liability or lease payments will be the fixed payments that you are making towards the ROU asset. So they are saying fixed payments towards the ROU asset. For example, we have entered into a lease agreement. The lease agreement says that the lease tenure will be 5 years, and for 5 years you will be paying 2,50,000 rupees. So a fixed 2,50,000 is payable every year. This 2,50,000 that you are paying every year will be included in the lease payments. Yes, this 2,50,000 may even include certain portion towards taxes. If the tax is a non-refundable tax, it should be also included. For example, you might be paying some property tax, you might be paying some import duty. These are taxes, credit for which, refund for which will not be available in future. So non-refundable taxes will also be a part of the lease payments. Yes, if this 2,50,000 includes GST, then we know that credit for GST will be available. If credit for GST is available, then GST will be excluded. So that's the reason they are saying including non-refundable taxes. So any lease agreement in which a fixed payment is to be made, the fixed payment will be a part of the lease payments. Instead of fixed payments, the lease agreement may be designed in a way that it is giving rise to variable payments. Then variable payments should also be included, provided the variable payments depend on an index or a rate. For example, they are saying payments linked to consumer price index. This is nothing but an index that is reflecting the inflation or an interest rate like LIBOR. Okay. For example, let us say this time also we have entered into a lease agreement, let us say for 5 years. Okay. Then the lease agreement says that in the first year you will pay a lease rent of 2,50,000. And then it says that every year the lease rent will increase by the rate of inflation. So inflation, we know that from time to time the RBI is declaring the inflation rate. So we may consider that as the inflation rate over here. Similarly, even in the Income Tax Act also, the central government announces from time to time what will be the cost inflation index. I may even utilize that. So there has to be some published data, and on the basis of that we will figure out what is the rate of inflation. The lease agreement says that, see, every year the lease rent will increase by the rate of inflation. So now lease rent is not a fixed amount, isn't it? In part 1 that we were seeing earlier, we were saying it is a fixed payment. We were saying that, see, for all the 5 years we will pay 2,50,000. So 2,50,000 was fixed. But now, as you can see, 2,50,000 is there for the first year agreed, but the rest of the years 2,50,000 will keep on increasing by the rate of inflation. Because the lease rents are fluctuating, lease payments are becoming variable. These variable payments will be included in the lease liability. So when you are calculating the lease liability, we require the lease payments, and lease payments will include these variable payments. If you strictly see over here, all that the leaser is trying to do is the leaser is trying to see to it that the costs which are increasing because of inflation are getting recovered from the lease agreement. Or as I said, it can even be a rate like the LIBOR. Instead of increasing by the inflation rate, the lessor is suggesting that see, it will be increasing at the LIBOR. So that is also possible over here. We know that ultimately, whenever a lease agreement is entered into, the funds of the lessor are blocked. And because the funds of the lessor are blocked, the lessor is losing interest. So through the lease agreement, the lessor is trying to recover the loss of its interest. So the way it can recover the loss of interest is by ensuring that the lease rent every year is increasing at a definite interest rate. So either the lessor is trying to recover its costs that are increasing because of inflation, or the lessor is trying to recover its loss of interest. In whatever way, this is how a lease agreement can be structured. The lease agreement can provide that see, the lease rent shall be increasing by some index, or the lease rent will be increasing by some benchmark rate of interest. This will give rise to variable payments. These variable payments are a part of the lease agreement. Item number 3, they are saying exercise price of a purchase option if the lessee is reasonably certain to exercise that option. So you are given a purchase option and you are reasonably certain that you will exercise this particular option. The lease agreement is for 5 years, and at the end of the 5th year, you have to pay another 1 lakh rupees and you can buy that particular asset, right? The title of that asset will get transferred in your name provided you are paying a lakh of rupees. When you are entering into the lease agreement at the commencement date as a lessee, you are reasonably certain, you are very clear that see, at the end of the 5th year, I will pay 1 lakh rupees and buy this particular asset. Since you are reasonably certain that this option shall be exercised, include this 1 lakh in the lease payments. Item number 4, they are saying payment of penalty for early termination of lease contract if exercise of such option is reasonably certain. Converse of the earlier item. In the earlier item, we were interested in purchasing that particular asset, so we are ready to pay something extra. We included. Here you are clear that you will terminate, right? You will go for an early termination of the lease contract, and because of which you will have to pay a penalty. You are reasonably certain that you will exercise this option and hence end up paying the penalty. Then penalty should also be included in the lease payments. So the lease agreement is for 10 years. At the end of 6th year, you can pay 1 lakh rupees and go for a premature termination of the contract. So at the lease commencement date, as a lessee, you are reasonably certain that yes, I will not continue this lease agreement for 10 years. I'm interested only in 6 years. So at the end of the 6th year, I'll pay 1 lakh rupees and go for early termination. So you are reasonably certain that you will pay this lakh of rupees included in the lease payments. And finally, the last item, item number 5, you will also include in the lease payments guaranteed residual value at the end of the lease period. Guaranteed residual value. What exactly is this? Now, many a times guaranteed residual value is confused. We are of the view that we will have to pay so and so amount at the end of the lease period. No. Most of the times the guaranteed residual value will be paid in kind, right? Instead of cash, this is going to be paid in kind. See, lease agreement, let us say, is for 5 years. Now, at the end of the 5th year, you are not given an option to purchase the asset. If you are not given the option to purchase the asset, then tell me what will happen at the end of the 5th year? At the end of the 5th year, you will have to return the asset back to the lessor, isn't it? For example, you have taken an item of PPE, you will use it for 5 years. You don't have an option of purchasing that item of PPE. So at the end of the 5th year, I'll have to return back this particular asset to the lessor. the lessor will get that asset valued in the secondary market. Will get it valued in the secondary market. That will be nothing but the residual value. What is the guarantee that you have provided for the residual value? That is what will decide whether cash is payable, yes or no. For example, you have given a guarantee. You have given, let us say, a guaranteed residual value of 1 lakh rupees. Think in this way. You have given a guaranteed residual value of 1 lakh. So at the end of the 5th year, I will return the item of PPE back to the lessor. The lessor is getting valued it in the secondary market, or the lessor is himself selling it in the secondary market. In the secondary market, when this asset has been sold, it fetches only 80,000 rupees. The PP is sold in the secondary market for 80,000. You had given a guarantee of 1 lakh. So the shortfall of 20,000 is payable to the lessor, because you guaranteed that, see, when I will return the asset back to you, it will have a minimum value of 1 lakh. The lessor is selling it and getting only 80,000. So the lessor will tell us that, see, I got only 80, you guaranteed a lakh. So now I have to pay 20,000 rupees shortfall to the lessor. The lessor sells it in the secondary market and it fetches 1,80,000. You guaranteed 1 lakh, but the lessor is getting 1,80,000. We don't have to pay anything. Yeah, you are not going to receive 80,000. Understand this. Although the lessor is getting 80,000 rupees more, you are not going to receive the 80,000. Earlier, 20,000 shortfall was payable, but here the excess amount is not receivable. You guaranteed that, see, when I will return back the asset, it will be definitely worth 1 lakh. The lessor gets 1,80,000. So we are now not supposed to pay anything extra. The value of the asset which I returned back in kind, right? I returned back in kind is sufficient enough to cover the guaranteed residual value. So when you say guaranteed residual value of 1 lakh, understand this. When I say guaranteed residual value of 1 lakh, it does not mean I have to pay 1 lakh rupees in cash. I have to pay 1 lakh rupees in kind. By kind, I mean the value of the asset that you return back, minimum of minimum should be 1 lakh. Anything less than 1 lakh, you will have to bear the shortfall and make a cash payment to the lessor. Anything more than 1 lakh, fine. We guaranteed 1 lakh and we have satisfied that obligation. Guaranteed residual value is very crucial, especially for those lease agreements where the asset will be returned back. See, there is always a possibility that an asset will be used recklessly, carelessly by the lessee. You know, this fear is always there at the back of the mind of the lessor. For example, let us say you are entering into a lease agreement for a car. Let us say the lessor is owning a car and this car is leased to you for 5 years. Okay, and just imagine for a moment that there is nothing like guaranteed residual value. You know what can happen? The worst of the fears that the lessor has is that the lessee will use the asset carelessly. For example, let us say you are the lessee and I am the lessor. I am giving you a car on rent for 5 years. Okay, it is quite possible that you may use this car, as I was saying earlier also, recklessly. You are like that, I don't own this car, isn't it? And that is the reason, whatever are the ways and manner in which an owner of a car will drive the car, you don't seem to be in that particular mood. As I said, you are not the owner, so you are using it, which in a way a owner will never use that particular car. So after 5 years, when the car is returned back to the lessor simply cannot recognize his or her car. The lessor is shocked that tires have completely worn out. There are cracks in the windshield. There's no difference between the AC and the heater, right? So this is what has actually happened, isn't it? So this is what the lessor is trying to do. The lessor is trying to protect its interest by insisting upon a guaranteed residual value. You know, today when I am giving this car on rent to you, on lease to you, I tell you that, see, after 5 years when you return back this car, it should have a residual value of 2,50,000. This is what I suggest to you. Now, if you use this car recklessly and after 5 years if you return back this car, I will sell this car in the secondary market. In the secondary market, I am getting only 50,000 rupees for this car. Now I will catch you. I will tell you that, see, you had given a guarantee of 2,50,000, but I got only 50,000. Pay me in cash 2 lakhs of rupees. So the moment I tell you that, see, after 5 years, the car should be worth 2,50,000. Now there is no scope of recklessly, carelessly using that particular car. You will start using the car just as any prudent owner will drive it. You very well know that, see, after 5 years, agreed, I don't own the car, agreed. But after 5 years, I have to return back the car and the car should be at least worth 2,50,000. So this will ensure protection of interest of the lessor. And that's the reason there can be a guaranteed residual value. So if there is any guaranteed residual value, it will become a part of the lease payments. Only thing that I was trying to say is that although you will include it in the lease payments, although you will say 2,50,000 is a part of the lease payment, you don't have to pay 2,50,000 in cash. You have to pay 2,50,000 in kind, in a sense that the car that you return back, the PPE that you return back, for that matter, any asset that you have taken on lease, when you return it back, it must have minimum of minimum a value equivalent to the guaranteed residual value. So, very quickly, yes, what are you going to include in the lease payments? Tell me, lease payments, what are going to be included? Very quickly, I run through it. Fixed payments will be included in the lease payments. Remember, if there are any non-refundable taxes, even that will also be included. If the lease rent is fluctuating on account of some index or on account of some rate, then the lease payments will become variable. It will be included, right? If you are given any purchase option, the exercise price of the purchase option will be included. You are given an option to terminate the contract early, and you are reasonably certain that you will go for such early termination, but you know some penalty will be payable. Include the penalty. And you have given a guarantee with respect to the residual value when the asset will be returned back at the end of the lease term. Include that also. Now, there are certain exclusions. So let's understand this point now. Any payment that you are making towards asset maintenance, repairs, insurance, common area maintenance, all this is going to be excluded. See, these are basically payments towards services. These are not payments towards the ROU asset. Here in inclusion, we are making it very clear. Payment that we are making towards the ROU asset. Any payment that you are not making towards the ROU asset, that shall be excluded. So when you are signing a lease agreement, the lessor may say that, see, I also provide maintenance service. So you may be paying something for the maintenance to the lessor. You might be paying something towards the insurance. You might be paying something towards the repairs. You are enjoying the benefit of certain services. These are going to be excluded, right? These are also popularly known as non-lease components. You know, many a times we refer them as non-lease components. Leases for an asset. The definition of leases that you will get a right of using an asset. These payments are not towards the asset. These payments are towards certain services that you are going to enjoy. So Ind AS 116 says you should exclude them from the lease payments. Okay. Variable payments are also going to be excluded. What kind of variable payments? Variable payments that do not depend on index or rate. For example, the lease agreement is suggesting that every year, whatever is the amount of sales, certain percentage of that sales is payable to the lessor. Now, sales will fluctuate every year. So this payment will also fluctuate every year. So it's a variable payment, but this variable payment will not be a part of the lease payments. So they are saying For example, payments linked to a percentage of revenue or the number of units produced or usage, these are more in the nature of royalty, right? So any royalty payment that you are making on the basis of the sales, on the basis of the number of units produced, on the basis of the usage, you will exclude it from the lease payments. Of course, this is an expense. I'm not denying it. It is an expense, but it should not be included in the lease payments. So that's what they are clarifying here. They are saying 1 and 2, yes, 1 and 2 above shall be separately recognized as an expense in the statement of profit and loss as and when incurred. So you are making a payment of any royalty. Royalty will be recognized as an expense. And then 3 is a little bit linked with the first point. They are saying a lease may also contain a non-lease component. Now, non-lease component refers to any payment, fixed or variable, towards a separate good or a service. These payments are not towards the ROU asset. As I said, let us say there is a lease agreement for asset as well as for maintenance. Okay. And the rent that we are supposed to pay is 1 lakh rupees per annum. There is a package deal which is offered by the lessor. The lessor says that, okay, let's enter into a 5-year lease agreement. In these 5 years, you have a right of using the asset, and the lessor is saying that I will provide the maintenance services. You are not supposed to look out for someone else for a maintenance. So lessor is offering you a package deal, 1 lakh rupees per annum, asset plus maintenance. No bifurcation is given in 1 lakh. The lessor is not telling you that in 1 lakh how much is for the ROU asset, how much is for the maintenance. It's a package deal, as I said. So package deal of lakh of rupees per annum. As you can see, you are having 2 components over here. The first component is with respect to the asset, right? This will be understood as a lease component. And there is also something relating to maintenance, which is a service. This we will understand as a non-lease component. Okay, non-lease component. Lease component and non-lease component should be separated, right? In one itself, we have made it very clear. See, in part 1 itself, we have made it very clear that, see, any payment towards asset maintenance is excluded. So if you are saying I am paying a lakh of rupees, then certain portion of 1 lakh is towards the maintenance. It should be excluded, because what you are paying for the ROU asset, only that can be included. So the moment you tell me that I am paying a lakh of rupees per annum for the asset as well as for the maintenance service, then I should find out that in that 1 lakh, how much I am paying for the asset and how much I am paying for the maintenance. And then I will carry out a bifurcation on the basis of the same. Whatever I am paying for the asset, that will go, that will get included in the lease payments, and whatever I am paying for the maintenance, that will be excluded. So if you are following Ind AS 116, then you will have to carry out an allocation of the lease payment. How much of the lease payment is for the lease component? How much of the lease payment is towards the non-lease component? This bifurcation is absolutely necessary. Having said this, Ind AS 116 provides a practical expedient. Okay. It says that total lease payment, just see, this is what we were discussing. Total lease payment should be allocated to lease and non-lease components on a relative stand-alone price basis. Okay, you are saying that for asset and for the maintenance total, you are paying a lakh of rupees. Now, to that same lessor, I am asking that if I want to go only for the asset but nothing for the maintenance, then tell me how much will I have to really pay? Okay, you are saying I'll offer a package deal, isn't it? Then how much is going to be paid? So the lessor says that, see, normally what happens is I'm charging 90,000 rupees for the asset and 20,000 for the maintenance. Let's say this is the price that is given. So if you are entering into a transaction, I don't want maintenance. You are saying I'll give you asset come maintenance. I'm saying no, I only want the asset. If I want only the asset, then tell me what will be my lease rent. If you go only for the asset, then the lease rent will be 90,000. Okay. If you go only for maintenance, then it will be 20,000. So I get an idea now that how much is for the asset and how much is for the maintenance. This is what we will call as the stand-alone price. If I don't go for a package deal, if I exclusively go for asset, then my lease rent will be 90,000. If I exclusively go for maintenance, then the charges will be 20,000. So I get an idea that 90,000 and 20,000, these are the stand-alone prices. So on the basis of the standalone prices, I should bifurcate this 1 lakh. You get my point over here? So what will happen here is, I'll use this as a ratio. Okay. So the standalone prices will be used by me. I will say that the lease component, okay, the lease component, you are paying total 1 lakh. So I will say it is 1 lakh into 90,000 divided by 1 lakh 10,000. See, 90 plus 20, that will be 1 lakh 10,000. So lease component will be 1 lakh into 90,000 by 1 lakh 10,000. And the non-lease component, I'm doing an allocation now. The non-lease component will be 1 lakh into, I don't want the answer, I'm just giving you the reference. In the ratio of the standalone prices, I am bifurcating the lease rent of 1 lakh. Your package deal of 1 lakh included a lease component and a non-lease component. I asked you what are the standalone prices. Exclusively only asset, how much lease rent? Exclusively maintenance, how much will be your charges? I am a smart person. I want to know how much benefit am I really getting. When I do 90 plus 20, I get it as 1 lakh 10. And now you're offering me only at 1 lakh. So now I realize that, okay, because of this package deal, I will enjoy a benefit of 10,000 rupees every year. Quite possible I may sign the agreement with you. However, Ind AS 116 says that although you entered into a package deal, you will have to carry out a bifurcation of the lease component and the non-lease component. Why? Because lease component will be included in the lease payments. Non-lease component will be excluded from the lease payment. So if I have to follow the principles of Ind AS 116, then the total lease payments have to be bifurcated. So on the basis of the standalone price, as you can observe over here, I am carrying out the bifurcation as demanded by Ind AS 116. But as a lessee, I feel that this is an unnecessary headache that I have to carry out. I feel that why all this allocation and all? I don't want to do any of these things. Do I have a simple way out? Yes, you do have a simple way out. See, they say, however, a practical expedient. They use the word expedient. We can understand this as something as a practical convenience. Many a times the Ind AS may give certain accounting requirements which can present unnecessary practical difficulties to the lessee. I am a lessee. I'm paying a lakh of rupees. I'm continuing with the original illustration. I am a lessee. I'm paying a lakh of rupees. I know that some portion of that is towards the maintenance. I know that Ind AS 116 says that 1 lakh should be bifurcated. I should find out how much is for the asset. I should find out how much is for the service. I know all these things, but I personally feel that this is an unnecessary headache which I have to do in my accounting books. I want something which is practically simple. I want something which is practically convenient. Ind AS 116 understands my needs. What Ind AS 116 says is that a practical expedient is available under Ind AS 116. Please understand now, where a lessee need not separate the two components. I can, as a company or as a lessee, take a stand that I do not want to do any bifurcation of the lease and the non-lease components. I want to include the total payment itself in the lease liability. I am allowed to do so under Ind AS 116. So they are saying a practical expedient is available where the lessee did not separate the two components. So I will pay 1 lakh rupees as I said in earlier illustration, and I will not do any bifurcation. Okay. So this is a benefit that I will get. What will be the benefit? I will avoid that unnecessary allocation that was required to be done. So that is the advantage. But the disadvantage is that now a higher amount will get included in the lease liability. Understand? Earlier, what was happening? I was taking my 1 lakh, multiplying this by 90,000 and dividing this by 1 lakh 10,000. Okay. This amount that I will get, whatever it is, this amount that I'll get, whatever it is, I don't want the exact amount, but I know one thing. It will be less than 1 lakh. Okay. It will be less than 1 lakh because 1 lakh is getting bifurcated. How much for asset? How much for maintenance? So 1 lakh was getting bifurcated. So this amount was going to be less than 1 lakh. And then this will be included in my liability. So an amount less than 1 lakh was to be included in the liability. When you do not do any bifurcation, entire 1 lakh will get included in the liability. So the advantage is that you are avoiding an unnecessary headache. Disadvantage is you will end up recognizing a higher amount of liability. So that's what they say at the end. Election of this option relieves the lessee from carrying out the allocation of the total lease payments, but it increases the lease liability. So the liability that you will be showing in your balance sheet will actually increase. That is the disadvantage over here.